Why should you form a business entity, that is, a company, to produce your independent film? Theoretically, if you're producing an independent film, you could have all the people participating in the production, that is, the cast and the crew and so on, sign contracts with you individually, and you could write all the checks relating to the film from your own bank account. In other words, you could just go ahead without forming a production company, and each contract would be between, say, Adam Actor and producer Paul, assuming that producer Paul is your name, which of course it's not. Or you could act as a sole proprietor, meaning that you could adopt a DBA, or doing business as alias, for the purposes of producing movies like Paul Productions, and then sign all your contracts under that name. But normally you shouldn't do this, and there are a couple of different reasons. One of them is protection from personal liability. So if everybody signs contracts with you, producer Paul, individually, that means that if someone claims that you didn't pay them the money that they're owed under the contract, they can sue you individually, and they can go after all of your personal assets. So your bank account and your house and any investment accounts that you might have and so on. And obviously that's not what you want. But suppose that you have a limited liability company called Paul Productions, LLC, that signed the contracts with the cast and crew and anybody else involved in the film. In that case, someone claiming that you owe them money based on your film normally has to sue Paul Productions LLC rather than you individually, and they have to satisfy any judgment that they might get from a court out of Paul Productions LLC's assets alone. There are other reasons to set up a production company that's separate from you, and I'm going to talk about them in this video. Plus, I'll talk about some of the pitfalls that you'll need to avoid when setting up a production company and how to run it on a day-to-day basis. But first, let's give a couple of disclaimers, because we lawyers just can't resist disclaiming things. The first is that what I'm about to tell you is not legal advice, because if I were going to give you legal advice, I would need to understand your specific situation and your specific needs. And right now, I'm just a random lawyer talking to you on the internet. And the second is that this video is going to deal primarily with issues of United States law. So if you are considering forming your production company outside the United States, or you're making your film outside the United States, the concepts that I talk about in this video might not necessarily apply to you. Finally, if you appreciated the content in this video, please like this video and subscribe to the channel so that I can keep giving you this kind of educational content in the future. Now, let's get back to why you want to form a production company. We talked about limiting your personal liability, but it's also important for optics purposes. A potential investor in your film or a potential distributor is going to prefer to sign a contract with a company and not with an individual person, especially if they're considering writing a check, if they're considering giving you money to make your film. Having a company shows that you're organized enough to create a business entity, create a bank account for it, keep up to date with the state paperwork that you have to file to maintain your business entity, and so on. So those are some reasons why you want to have a business entity. But what type of business entity should you create, and what steps do you have to take to do that? Let's talk about that next. At least under US law, there are a bunch of different types of business entities that you can establish. Basically, you've got your so-called C corporation or your INC corporation. You've got a limited liability company or LLC, or you've got a partnership. Those are the basic options from a 30,000-foot perspective. Which of these kinds of entities should you use? I would say a limited liability company or an LLC, and that's the standard practice in the industry. Why? The major advantage of an LLC over a C corporation is that the profits and losses of the LLC are treated as the profits and losses of the individual owners of the company for tax purposes. The profits and losses are allocated to the owners according to their share of the company. For example, if you and I both own 50% of an LLC and the LLC makes a profit, I get treated as having earned 50% of those profits for the purposes of my personal income taxes. If the company takes a loss during a given year, then I get treated as having taken 50% of that loss, and I can deduct that loss on my personal taxes, which is also nice. That's much better from a tax perspective than using a C corporation. A C corporation has to pay corporate income tax on the profits that it makes. Then, when the corporation makes a payment to its owners, let's say in the form of a dividend to its stockholders, the owners have to pay individual income tax as well. This is something that's called double taxation. And it's the reason why LLCs are usually the preferred type of business entity when it comes to making independent films. What about partnerships? In what's known as a general partnership, the partners are personally liable for all of the debts of the partnership. So that's not something that you want, because like we talked about, you want to be able to limit your personal liability to the extent that you can. Then there's something called a limited partnership, where the partners are divided up into what are called general partners and limited partners. The general partners are individually liable for the company's debts, while the limited partners are not. But the limited partners can't be involved in managing the partnership's business. They basically have to act as passive investors. If you're an indie filmmaker, you're almost certainly going to want to be involved in managing the business of your production company because, of course, you're going to be actively producing your film. You're not just a passive investor in the company. So if you form a limited partnership to serve as your production company, you're going to need to be one of the general partners because you're going to be involved in the day-to-day management of the partnership's business. But then that means, again, that you're personally liable for the partnership's debts, and that's not what you want. So that's why my view is that an LLC is the best kind of business entity to use to form a production company to make your film. Here's another important point about organizing your business entity. I also think it's important to create a separate LLC for each film that you produce, which will write and cash the checks and sign the contracts relating to that film. Why is this? Well, let's suppose that you have a production company that you've produced multiple films with. Let's again use my lame example and say that it's called Paul Productions LLC. And let's use another lame example and say that you're currently producing a film called Lawyers Rock. Should the money to pay the expenses relating to Lawyers Rock come out of Paul Productions LLC's bank account? Should Paul Productions LLC sign the contracts and write the checks relating to the film? My answer to that would be no, because Paul Productions LLC, at least in this example, has already signed the contracts and the checks for other previous productions. And so it's on the hook if someone comes after them, if someone files a lawsuit against them based on some kind of dispute arising out of the previous productions. So suppose that Paul Productions previously produced a film called Lawyers Are Awful. If someone claims that they didn't get adequately paid for the work that they did on Lawyers Are Awful, they'll be able to get at the profits that the LLC may earn from making Lawyers Rock, because those profits are going to be in Paul Productions LLC's bank account. And vice versa. If someone sues you based on some issue relating to Lawyers Rock, they'll be able to get at the assets and profits that happen to be in the bank account of Paul Productions LLC arising from Lawyers Are Awful. The solution to this problem is to create another LLC that's specifically intended for Lawyers Rock, and in fact to have a separate LLC for each of the films that you make. That way, anyone who claims that you owe them money based on a particular film can only go after the LLC that's specifically associated with that film, rather than having access to the assets and profits related to all your films, which would be the result if you only went with Paul Productions LLC. Another point that it's important to make here is that it's possible for one LLC to own another LLC, and in fact, for an LLC to own parts of different types of companies, like C corporations as well. You could conceivably create Lawyers Rock LLC specifically for producing the movie Lawyers Rock, and make Paul Productions LLC an owner of Lawyers Rock LLC. Then Paul Productions LLC would have a right to a share of the profits and losses from Lawyers Rock, but generally speaking, someone who made a legal claim based on the film Lawyers Rock wouldn't be able to get at Paul Productions LLC's assets. Next, let's talk about creating an LLC. This actually is not that difficult. In the United States, the requirements for creating an LLC do vary from state to state, but the differences are not that substantial. To start an LLC, you'll have to file what are called Articles of Organization with your state. The Articles of Organization usually just have a couple of basic pieces of information. First, they have to identify the managers of the company. What does that mean? The owners of an LLC are generally referred to as members. An LLC can choose to have specific people manage the company, like a CEO and a CFO, or it can choose to simply be managed by its members. That is, like I said, the owners. Usually when we're talking about an indie film production company, the LLC will have one or two members, and it's going to be managed by those members. You're not going to separately hire a CEO to manage the production company for your independent film, right? I mean, it's hard enough to raise money to hire a cast and crew as it is. Then you're going to need an address for the company that's located in the state that you're forming it in, which is basically the address to which the state is going to send any correspondence, because the state's going to want to correspond with you by mail, since it's the government and it hasn't necessarily come to understand 21st century methods of electronic communication. You'll also need to provide an address for what's called an agent for service of process, which basically means the address where any lawsuit-related papers are going to need to be served. Then you're going to have to pay a small filing fee. In California, as of the date of this video, that's $70. And now there's a slightly more complicated part, which is preparing what's called an operating agreement for the LLC. First and foremost, what happens in the operating agreement is that it says who owns the LLC, and if there are multiple owners, what percentage of the LLC each of them owns. The ownership percentages, like I talked about earlier, determine each owner's share of the company's profits and losses for tax purposes. It also talks about how the members are going to make decisions about how the company will be run. For example, it might say that a unanimous vote of all of the members is going to be required to transfer all or substantially all of the company's assets. That's a typical provision you'll see in these operating agreements. These operating agreements can look intimidating to non-lawyers, but for an indie film production company, they're usually pretty simple. It's easy to find templates online for this kind of agreement, but of course, the best approach is always to talk to a lawyer to make sure that your specific wants and needs are captured in the agreement that you're signing, and particularly if you have business partners and your operating agreement is supposed to capture an agreement that you've made between you and your other partners. Now that we've talked about forming your LLC, let's talk about what it takes to run it on a day-to-day basis. The first thing to remember is that you'll have to periodically file forms with your state with the same kind of basic information we talked about earlier. So the company's address, the names and addresses of the managing members, the address where lawsuits have to be served, and so on. In California, these are called statements of information. On these forms, you either confirm that your company's information, its contact information, has not changed, or you put in any updates that have come to light since the previous form that you filed. And of course, you have to pay a small fee because basically these statements of information are a way for the state to get some more tax revenue out of the companies that do business there. But anyway, even though the LLC's income is passed along to its owners and the company is not taxed on its income, the LLC usually has to pay what's called a franchise tax to the state, which is typically a couple $100 a year. It also is going to have to file a tax return, even though the income is passed along to its owners, with the IRS and the state. It's very important to stay current on filing these statements of information and paying the franchise taxes, because if you don't, then the state is going to revoke your LLC's ability to do business in the state. This could also be used by people who claim that they're owed money by your LLC and they want to be able to get at your personal assets to satisfy what they see as your obligation to them. Now, I know I said earlier that the owners of an LLC are not personally responsible for the company's debts. So how could I be talking about creditors getting at your personal assets? The answer is a legal concept that's known as alter ego, or piercing the corporate veil. You have to treat your LLC basically as if it were a separate person from you with its own property and its own interests. What does that mean? Among other things, first and foremost, you can't take money from the LLC's bank account to pay your personal expenses, and you can't use it to make an interest-free loan to yourself. You have to keep your personal bank account and that of the LLC separate. Second, you have to keep the LLC adequately capitalized. And what that means is that you have to keep enough in the LLC's bank account to pay its ongoing expenses. Third, like I said, you have to comply with your state's paperwork and tax requirements for keeping your company in good standing. If you don't do these things, that creates a risk that you could be found by a court to be the quote-unquote alter ego of the company, meaning that you're going to be personally liable for the company's debts. So make sure that you treat your LLC as separate from yourself and you follow the necessary corporate formalities. Anyway, I hope that was helpful to you in understanding why it's important to have a separate business entity as a production company and how to set one up. And thank you for watching.